we know there has been some noise talk about the new kid on the block, which is sort of just competing with CRED.
Hello, listeners. Welcome back to another episode of Economically Yours. Today, we have with us Prince Jain, a very young guy who's one of the founding team members at CheQ. And he has previously been working with new age lending products like Jupiter, and he's also consulted banks and businesses at MasterCard. And he also has his own newsletter called Unit Economics, which I'm a fan of, by the way. And I think he is a fan of UPI. So we'll have a lot on that during the podcast. But before I start, welcome on board, Prince. I'm really delighted to have you as a guest on my podcast. And let's quickly begin with your background, your experiences. If you can walk us through your journey so far, and what you do basically.
Sure. Thank you so much for the warm introduction, firstly, and for inviting me to your podcast. Quite humbling, honestly, to follow up some of your previous marquee guests. But I should probably start by saying hello to all the listeners of Economically Yours. And as for a brief about me, I've been over the last few years fascinated by fintech and product both. And as for advancing my passion for fintech, as you said, I've been jotting down my thoughts around payments and a bit of lending since somewhere around 2020, and it's been 3 years since. And been quite fortunate to meet interesting and driven people like you since then. In the meantime, I have been working on building products and had that opportunity to do that at Jupiter with a couple of lending products we were building at that point. And since then at CheQ, where I've been for more than a year now. Um, I presently sort of look at end-to-end customer experience, the rewards, plus uh, dabbling a little bit on monetization at CheQ, which is more of an industry reality of sort of where we need to be. At Jupiter, I worked on a couple of lending products. We were at that point experimenting with credit on PPI, which unfortunately sort of met with a few regulatory hurdles, but quite interesting just to look at the 0 to 1 journey of both the products. And before that, as you said, MasterCard as a fintech consultant for banks and startups and as consulting goes. So yeah, that's more or less about it.
Right. So you mentioned, what you do at CheQ, but can you like walk my listeners through what CheQ is? Because I do not want to go out and say CheQ is a competition, it's the upcoming competitor of CRED. So I do not want to do that. So can you like walk us through what CheQ does and what the platform is all about?
Right. No, it's actually fine if you do as well. I mean, we know there has been some noise talk about the new kid on the block, which is sort of just competing with CRED. But right, for the lack of maybe time or better words, CheQ is a credit management platform where a user can see and pay their credit card bills and earn what we internally call the asli rewards for doing so on the platform. So just from a very high level, that's the core of what the product currently does. The Uber objective, of course, for us is to build a platform that focuses solely on credit, which is where we sort of go away from credit as a platform as well. And yeah, it's going to be a long-term journey. But we sort of have very high ambitions, and we want to build on the India story of enabling credit and financial inclusion for millions of customers.
Right. So, okay, two things. One, in this particular answer, you mentioned about enabling credits, right? And in the
Right.
previous, just 2 minutes ago, we discussed about the PPI regulatory hurdles that have come in. So, given these two parallel aspects that are, running in the fintech space, what is your macro outlook on the fintech ecosystem in India? And where do you see it going like?
Hmm. That's that's a broad question, of course. I mean, I can pick up many brushes to sort of answer that. But what I should maybe start with is by saying that it's a great time, firstly, to be part of the entire fintech space, given how much focus from a regulatory investor and from a founder perspective, the sector has been getting the kind of growth certain verticals within the sector have been seeing, and just the proactive involvement of regulators overall, which has been very key in advancing the sector as well. Um, Going a little deeper, I think if we look at, let's say, what opportunities or sort of challenges there are in the industry, I'll specifically talk about payments because that's the area where I've been focusing on, and maybe a little bit of lending. For payments, it would not be wrong to say that India is the flag bearer for payments in the entire world, given the kind of innovations and the type of offerings that we have in the country. And lots of credit for that has to go towards RBI and in the last decade towards NPCI for establishing fairly large scale fund transfer systems and for constantly sort of promoting innovation while not being ignorant to the safety and security of customers, which is a very good balance that the regulators have been able to establish. As for payments, the key sort of trends I would uh, want to call out is one on UPI. I think there's been lots of talking points around UPI for good reasons. All in all, new forms of enabling payments have been thought of for UPI in the last couple of years. Of course, I mean the growth story of UPI has been a topic largely spoken about, and that continues to be something that we see year on year. But yeah, lately what RBI has been doing is to look at even new levels of growth, new areas where UPI, although is already a very mass product in the country, can help us unlock, let's say, other parts of financial inclusion. And so it's trying to do that through forms of enabling credit on UPI or bringing UPI Lite, which is a much safer form of, let's say, doing low ticket payments on the platform. Safer might not be the right word, but more convenient sort of form of doing that. So UPI has been a talking point. I talked about regulators a little, but RBI particularly has been experimenting with offline payments as well as a centrally backed digital currency. So you might have heard of e-rupee. That's something in progress. There have been a few talks here and there of how it might sort of just compete with UPI and might replace cash in the future. Um, RBI has been also very proactively looking at fund movement models in the country, and there are a lot of startups sort of have played in the gray area for the last few years. RBI has stepped in, sort of tried to just course correct what should be the operating model and how people should play around it. And then we know regulations around PPIs, around tokenizations. So just moving towards security while at the same time sort of in itself introducing new circulars, notifications, directions to fast forward our KYC guidelines and a few other guidelines that sort of enable more digitalization and inclusion of payments in the country. As for the challenges, which is something I'll maybe take a moment to sort of highlight. Monetization is something that's been a talking point in the last year, and that's become the environment reality because of the investor pushback, plus how the businesses have responded to just public offerings that have gone out. Because of which now I think there's just a shift in how products are being built in the fintech itself. And with regulation, I think there's just been much thinner line of gray, so much thinner sort of in between line between what's red and what's white that players are playing on. And so we're moving towards a more traditional forms of allowing payments or lending in the country, which is making it much tougher to differentiate yourself, which is crowding the market as well for particular subsegments. Because, for example, for loans, you now just have, let's say, two or three ways in which you can offer loans, which has always been the case. But in the last 4 or 5 years, sort of fintechs have tried to just play around with that a little. So those are, I would say, some of the areas where I see lots of movement, lots of interesting progress.
Right. So you touched upon fund movement cycles that, the regulators are kind of aggregating, acknowledging. Could you throw some light on what do you mean by that?
Not cycles particularly, but RBI's regulation on digital lending, for example, specifically talked about how loan should be dispersed, where it should be dispersed from, and where it should be then eventually sort of be deposited. And so RBI has given, I think, the BNPL models and some of the pooled account models that had been operating with respect to where the money or the credit line issued for a user used to reside with the likes of Unislice. RBI has sort of come in and said that the money has to go directly from the disburser's bank account, which would be a regulated entity in our case, to the direct borrower, which would be a customer, sort of limiting the co-brand or the intermediary fintech's role in the entire picture. Um, and that's where sort of I was referring to fund movement.
Got it. Got it. Okay. So talking about UPI payments, lending, and everything. Okay. So now UPI, is becoming like a super app, with respect to payments and lending that's coming. Like NPCI has been doing a massive work. Now UPI, I think turns about 36 crore transactions on a daily basis, which is massive, which is huge. Uh, Initially when we started with UPI, we could either input send payments across to either a QR code or a number or a UPI ID or something. But then, like, we also had prepaid wallets like PPI that you talked about. But now in the last year, we've had two more inclusions. One being the Rupay Credit UPI that's come into the picture, and the recent one being the credit line that's come into play with respect to UPI. So, can you like throw some light with respect to this credit line UPI that's come into picture, and how can it pose as an opportunity or a challenge to the Indian fintech ecosystem?
Right. So, firstly, there's still some gray around what RBI, for example, refers to when it says pre-approved credit line sanctioned by, let's say, a depositor or a regulator, or the bank from which you are transacting on the platform. Um, it is just one of the other forms of credit that RBI has previously allowed. I think you talked about Rupee cards. They don't have the biggest share of credit card market in the India, but given that it operates on the same sort of networks that our NPCI had built, and that NPCI was the enabler for the entire credit card on UPI platform, Rupee became the first network to go live with their credit cards on UPI. With credit lines in particular, just a few points that I mentioned in the article that I had just published as well this last weekend. There is a large retail loan segment in the country. It's almost similar to the credit card segment, so roughly 60 to 70 active lines, perhaps even more, at the point that we are currently talking. However, you'll notice that the difference in how currently loans operate is that a lot of loans are directly deposited to users in their deposit account. For example, if let's say you have a bank account with Kotak and you have been using it for UPI payments, there's a chance that you might have some credit line that was deposited towards your savings account that you have been using on UPI. So all the savings account where such retail loans have been getting deposited, they already were enabled on UPI per se, right? So it's not that this tab sort of opens up the entire retail loan segment. It just opens up a very specific part of retail loans, which is pre-approved credit line, but not deposited to a user's account already, right? So that's one part. At the same point, I think how it might sort of just um, let's say impact the industry. There would be an increased inclination for banks to upsell pre-approved credit lines. So they have been focusing more towards. I think personal loans are the biggest segment when it comes to retail loans. There is a chance that banks sort of just maybe migrate a little towards upselling such pre-approved credit lines and sort of restructure them somewhere around credit cards, which come with an interest-free period just to ensure that there is more disbursement. At the same time, UPI apps have been struggling a lot with getting bank partnerships or monetizing on top of UPI in itself, although they do allow transactions in millions and crores to be processed, as you mentioned, on a daily basis. So this allows them an opportunity to just tie up with banks, sort of have an in-app loop of dispersing such credit lines to the customer, and then at the same point allowing payments via those credit lines on the UPI functionality that they already have. But very early stages, I would not say that I have fairly strong point of views with respect to most of the things going around pre-approved guidelines part of the UPI. Very early stages, the guideline just came out recently, and it would be interesting to see how it evolves.
Great, great. Okay, let's transition a bit away from UPIs to now credit cards, okay, which is the kind of the talk of the hour with respect to what check does. So I know that if you make credit card bill payments on check, it converts them into check coins that can be either redeemed for cash or used as
Check
vouchers.
chips. Sorry to
Check
correct you.
chips.
Check
Sorry,
chips.
sorry.
Yes.
Credit coins. Right. Sorry. Check chips. Right.
Yes.
So, and which can either be redeemed for cash or you can go for vouchers against them. So now this is a big improvement with respect to cred coins that people do not know what to do with. I mean, that's one big headache that cred users have today. So I want to understand a little bit about Check's business model over here. Yeah, and what are some of the challenges that you foresee with respect? So I know about the opportunities that are lined up, but if you could throw some light on the challenges.
Sure. You mentioned credit coins and the parallel with check chips and just that entire piece. So while I'll firstly I think want to come out and say that there's a lot of internal appreciation within our team for what Cred has built over the last 3 to 4 years and how they have built it. It's a very envious product and a team in itself. And all of us, of course, love the design and the entire marketing of how the product has gone. We are in the business of enabling credit, and credit is sort of our core focus or uber objective for existence. And we believe that credit sort of has played around a little with credit. It was a means to an end of getting access to those customers, and then sort of has expanded to offer more services like UPI transactions, utility bills, and so on. As for the business model and the challenges around check, um, we know that rewards was a gap in terms of how credit card repayments were done by cred, and that's an opportunity that we understood while thinking about the product strategy, that we can potentially exploit while going into the market, and that could just set us apart as well because no one would be doing rewards in the tangible and consistent way that we would be doing. So we identified the opportunity. At the same time, with the opportunity comes challenges, and so just the burn that a platform expects by introducing rewards that are easy, very sort of valuable in terms of just the direct conversion what a user can do in terms of in-app currency and the actual INR value. They do push a little, let's say, pressure in terms of business of what we might want to do in the future. And we understand that currently the growth that we are getting is much higher than we anticipated. And the love of the customers that we have been getting has been much higher as well. Um, because of which we have already sort of fast tracked the entire business 6 months further to where we thought we might be, which means that we are focused towards monetization, revenue lines, maybe a couple of other optimizations across the app has become higher in the last month that we did not anticipate a couple of months ago. So as a challenge, just mitigating those sort of daily issues, mitigating the current environment, ensuring that we are being very proactive in reacting to the challenges that just attraction plus the environment is throwing at us. That's where the business is currently sort of trying to just handle the product and just ensuring the sustainability of the business as well. So yeah, that's uh,
Right. So drawing just drawing two parallels over here. We discussed about UPI, we discussed about credit card payments and check and credit. I understand that you write a lot on UPI, and I also know that you work for check, right? So drawing these two parallels, what is your view with respect to the user base that's growing? Uh, with respect to people using UPI vis-a-vis people using credit cards today.
hmm. See, firstly, I don't necessarily think there is a direct competition between UPI and credit card. The reason I say that is, although there's, of course, an overlap of people who have looked at credit card as a form of convenience for them because it's accepted at probably 99% of the mid to large scale, let's say, stores that you would do any purchases at. Uh, for these subset of users, yes, the convenience of UPI might have been a benefit good enough for them to sort of just move away or shift their spends from credit cards towards UPI. And due to just how low friction, easy to use UPI is, maybe for the subset of users, very likely they might have migrated a large proportion of spends. And we know that once you start using a payment method for a certain use case, it's much tougher to sort of re-engage or reactivate other forms of payments. You would always want to be top of wallet for a customer in terms of getting their higher share of spend. So yes, for these subset of customers who looked at convenience, maybe credit card was at a loss once UPI came in. However, I'd say for majority, the mental accounting of credit cards is quite different, and customers usually in leaps use it for one love of credit, which is essentially just the gratification of doing delayed payments. Be love for rewards because there's no other payment method which sort of consistently has banged itself on offering users some points or rewards that can be used. And see, just credit card as a status symbol, right? It's still a very niche product in the country given how many users use it, and just access to some mid to high level credit card is in itself a status symbol that you like to own, have in your wallet, use it for larger ticket expenses. And so for these 3 to 4 use cases, I still think credit card sort of holds its own. And the proof is in the pudding with respect to the growth it has been seeing in terms of the issuance of credit cards in the market, the spends of credit card in the market, and both of these numbers have been in double digits over the last year, month on month, quite consistently. So yeah, I don't directly see a competition. And yeah, I think credit card sort of has held its own and is doing well, especially with the PPI guidelines. Particularly, I would want to mention that lots of fintechs, lots of new age startups are moving towards issuance of credit cards as well. So just in due time, we might see in money, Jupiter, Fi come up with their own credit cards and just maybe with a very high scale of acquisition as
Right, right. Okay, discussing about payments, I want to understand your views on two system of payments that we are seeing in India. One is the digital e-rupee, and second is the potential use of cryptocurrency as a payment method.
Yeah, I'm not a big believer in the potential use of cryptocurrency in the country. I do have some maybe differing thoughts on the applicability of some of the technology behind it. However, as for the use of it in real mainstream cases, I don't think regulators look at it favorably. And at the same point, I do not see a lot of benefit of it in our market specifically, given just how convenient UPI already is, and given some of the other offline payment sort of methods that RBI is working with. On e-rupee, it's quite exciting to look at how something like e-rupee might work because the entire the entire mode with which RBI is operating on e-rupee is to build something that sort of emulates cash by not having any savings rate attached to it, by being as convenient, maybe to some extent as anonymous as cash. And there have been a few pilots. I'm not completely updated with respect to where the state of e-rupee is currently. However, just imagining cash in digital form being as easily withdrawable from your savings account to a digital wallet issued by, let's say, centrally backed by centrally banked, is just something that appears very futuristic, right? Something that we all, maybe in 10 years, 15 years, might want to look forward to and imagine a world where, let's say, we don't carry cash and we have something equally as secure, equally as anonymous, usable, accepted in the country as cash is today. So yeah, I'll just maybe put up into that and sort of end it there.
Right. Okay, while that sounds, that appears to be very futuristic, I want to understand how do you see your future unfolding? What are your long-term goals? And, where do you see yourself in this fintech ecosystem in the India growth story, as you mentioned?
I'm very happy, firstly, to just be involved with the space that I'm in, and
Mm.
and the kind of just innovations, the kind of solutions that we sort of on a daily level brainstorm and come up with. So very exciting just to do that. I would in future, at some point, love to start up, build something of my own, and that has been the path sort of that I've been trying to chase. I have not put a countdown or a timer to it. However, I started from a fairly high level consulting role in an MNC, then to a relatively, I would say, a mid scale startup in Jupiter, which already had 250, 300 members, seeing some parts of zero to one journey, and the same time a startup that had fairly good fortunes and sort of resources at its helm, and then seeing a completely zero to one journey at CheQ, where we started with just 4 or 5 members when I joined, and working out of a small WeWork office to now a team of 45, seeing all the stages of zero to one. So that's been quite fortunate for me as a journey. But yeah, eventually, hopefully, start to build something of my own, and that's where I feel I would be in the long term, and hopefully keep writing on fintech
Yeah.
while I do that.
Mhm. Right. So are you a journey oriented person or a goal oriented person? How would you categorize yourself?
I think that I shifted. I was a little more goal oriented initially, and sort of results sort of drove my emotion towards just daily actions I took. However, I've started to just love the process, follow it a little more, enjoy it a little more, and then just leave it to some fortune at the end of it. So yeah, that's how it's been.
Right. I know you're very young right now, and I'm not categorizing you into someone who's, spent about 30 years in the industry or something like that. But if there are some part tips or something that you want to, share with the budding entrepreneurs that we have, because every other day there's some startup that we are hearing of today, right? So any tips that, especially in the tech space, so any advice, any tips that you have for them?
I mean, I would speak from the point of view of someone who has seen zero to one journeys and relatively, I would say, upstage startups in fintech. Um, so as a founding team, it's any entrepreneur who's starting up. I think it's very important that you always ask why of anything that you're doing, and it sort of has to lead towards the core of what you want to build or the need that you need to solve, because you have to be very prudent with respect to using your resources and the time that you have. So understanding the why, always questioning it, always iterating on it while you're in zero to one, and being just open to feedback, not being too emotional about what you're building is something that I have seen work very well at the two startups, and something that has been useful in taking just prioritization calls on a daily basis. um, Secondly, it's important that you hire well, especially I think the culture of the team begins with the founding team that you hire, and hiring people who have high levels of ownership, at the same time some humility to go with it, goes a long way in building the right culture. And it's very easy for founders, for people who joined in early, to sort of believe that they know more, or to fall into that heuristic of just thinking that they sort of came here, they build it from one to zero to one, and so they might just be better at certain things. However, it's important that you delegate and sort of take up only tasks which you can do and no one else can do, and sort of prioritize that at your end, and then hire well enough to give rest of the critical tasks, some functions, to others within the team. It's very important to sort of not just micromanage and just build product in a way where you are being present everywhere. I think that would be my main suggestion to any budding entrepreneurs, any budding teams. Important to focus on core and just to hire well and delegate well as well.
I think very well said, because the company that I'm a part of, like we're a startup, we're a young company, and the core members, we are only 6 core members, and 50% of us lie between the age of 25 to 32, and the remaining 50% lie between the age of 32 to 42-ish. So this age group, the diverse age group that's there adds on to the benefit of a working culture within startups. So aptly put, Prince. Thank you. I'll sum up the conversation with respect to the UPI versus credit cards. The discussion that we had, the entire business model at Check, the Check chips that are being used, and your business model. One last question: any expansion that you are looking at Check? Any inside story that I can goof about, or is it that right now you're just working on enabling credit system, credit card payments as of now? Because CRED, we all know is a super app. And again, I'm not, uh, kind of putting this out that you are a direct competition. I love Kunal Shah. Okay? I'm a big fan of his ideologies, his visions, and his entire, I would say, the brain that he has, right? But just wanting to understand that as businesses grow, like as Check is doing today, anything that you're looking to expand into, any vertical you're looking to expand into?
It helps that our focus is towards credit. So it allows us to close certain doors, say no to certain ideas that otherwise can seem very exciting if you're not completely aware of what you need to do. So we are definitely in the future looking to expand to use cases that sort of enable users to understand, take actions around their credit in a much better way. So there are certain projects internally which are ongoing, which of course I'll probably not be able to throw light on. But yes,
Yeah.
we are looking to expand within credit and towards more directions.
Great, perfect. I'll just sum this up with our signature rapid fire round. So 5 words and quickly just, whatever comes to your mind. So the first word I have is the FinTech India growth story.
Quite inspirational. And yeah, that's it.
Cryptocurrency.
Uh, better be safe than sorry.
Okay. UPI.
Incredible. I think it's one of the best innovations we have seen in the country, not just in fintech, but across
Okay. Check.
credit.
Okay. And the last one, Prince Jain.
uh, Young, quite driven, and yeah, hopefully it remains that way.
Great. Thanks, Prince, for doing this. I really appreciate your time. I am delighted to have you on the show. Thank you for doing this.
Thank you for inviting Charmi, and yeah, do keep listening to Economically Yours, and do check out the Check app for anyone who's listening to the podcast. Thank you so
Link in the
much.
description, guys. Great. Thanks. See you around.